traders. So yeah, the Fed's just been a couple of hours ago now, but the market sort of took the statement and the move of 75 basis points as hawkish. But it was in the presser that when Jerome Powell said it's appropriate to slow increases at some point. That's fair enough, and data will be dependent. But he doesn't see the US in a recession. He thinks the GDP, which is due out tonight Australian time or tomorrow morning for the US, with a grain of salt. Data dependent, but GDP estimates are a grain of salt. So yeah, with the dovishness in his tone during the presser, things really got interesting. The market sort of didn't do much on the statement, but certainly got active on his interview. However, the bond market, the short end, certainly went this direction in a real hurry. That's the bond market, and the yields went that direction in a real hurry. But the long end is still out, and we can see this is the dot plot where the Fed estimates interest rates to be by the end of this year at just under 3.5%, so around 3.25%. Although he did say that that where they are now, which is at 2.5%, this is where we are right now, is neutral. So, you know, another 75 basis points may not be on the cards. However, looking forward, the Fed expects, you know, interest rates to be higher, closer to 3.75%, whereas the market has priced, which is this black line, is pricing interest rates at 2.75%. That's a big gap of 1% differentiation between where the market is pricing it and where the Fed is pricing it. And again, down here, you know, we're at sort of 2.4%, whereas the Fed's around, you know, 3.4. So big gap between where the market is looking and where the Fed's looking. So let's go and have a look at the prices. First we'll start with bonds, and as we can see, you know, bonds really didn't do much until, this is the 10-year bonds, until Jerome Powell started talking. That's a 1 hour chart, and this is the 5 minutes. So this is the that's the announcement from the Fed on the interest rates, and then this is his presser where things really got active. But on the day, it's, you know, not much really when you look at it on a daily time frame. So where we saw the action was pretty much in, well, if we look at euro dollar on a 5 minute, we can see that US dollar weakness really took off on the back of Jerome Powell. So and we're seeing stocks also get heavily bid on the back of his comments. We're seeing gold rally, commodities rally. Yeah, that's copper there rallying. So bad news is good news, right? So if the GDP figure comes out tonight as negative, just buy, because Jerome Powell is now not really looking at it, and bad news is good news. So, you know, the fear indicator is off, and everything's back into bull mode. And with that in mind, I think it's now sell US dollar. That'll be the thing. Right? US dollar has been on a pretty strong run for well over a year now, and I think that run may be coming to an end. Technically, we're not seeing that yet in price action, so you know, I wouldn't necessarily sell everything US dollars. We need to wait for the technical picture to match the fundamental picture, and if it doesn't, then obviously you don't trade it, but if it does, then that's what you're looking for. And I think that's about it for today. I don't really see anything worth trading today. Maybe buying stocks if you can get a little pullback, but other than that, yeah, nothing stands out for a trade today. All the best, guys, and I'll see you tomorrow.